Hi everyone, George here, and today what I'd like to bring to you is rather, a video about the top 5 overlooked write-offs. So with no further ado, let's get started right away. We'll do our best. Now, as usual, before I start any videos, I'd like to advise you I'm not an accountant or a lawyer. This video is strictly for entertainment and hopefully it will motivate you to do a little bit more research and give you a greater insights as to what kind of deductions you should be looking for. So, like I said before, no further ado, let's get right into it. And let's go to number 5. It will be a countdown. Office expenses. Now, why is it that we call it an office expense and not an office write-off? Because typically, in the world of tax terminology, we don't have in Canada what we call write-offs. Basically, um, usually in Hollywood movies, where they feature accountants and the client has incurred a large expense, something exorbitant, and it really has caused them some damage. They go to the accountant. Don't worry about it. Write it off. That's the term that they use. But to use proper Canadian tax terminology, what we have for businesses are expenses. And expenses are broken down into two key groups. Current expenses, and that is an expense that you incur, but the value of that expense will last more than 1 year and will add value to the property that you repaired. And a current expense, which is a run-of-the-mill expense whose value will not last more than 1 year, but you need to incur it in order to keep up the possibility of you doing your business properly. Forgive me for the hat, Blue Jays. I'm a fan. It's my thinking cap. So number 5, office expense tend to be overlooked. And I remember back in the day where I was walking close to my two bosses at the time, John Barron and Malcolm Campbell, where I worked, and they were each talking about the run-of-the-mill expenses for pens. You need, if you're running an office, and what else? Erasers, staplers, fasteners, envelopes. Now, in terms of every business should have envelopes as an expense, whether you're sending out flyers, menus, if you're a restaurant, all that is what I would characterize as a current expense. And it can add up. So you need to keep tab of it. Hopefully in a spreadsheet, at the end of the year, you'll have your total of your expenses. And they can add up to a sizable amount. Let's go on to number 4. Number 4 is maintenance and repairs. Now, what do I mean by maintenance and repairs? It's not necessarily only your car. If you have to repaint your office, if you have to repair some furniture because you can't afford to buy a new desk, but you need to pay someone to restore it and bring it up to its normal presentable status. It can be someone cleaning your office day and night. It can be um, buying disinfectant for your hands or detergent and different cleaning fluids to make sure that your office is nice and clean and disinfected. The same holds true for a restaurant. Maintenance and repairs. You're repairing the washing machine because a part broke, and hopefully the part will be, if it will be a current expense if the part or the work is very low in price relative to the overall price of the asset. You can write it off right away. You can expense it right away, to use the proper term. Um, Number 3, car expenses. Now, with car expenses, uh, if you bought the car and you have a loan, the interest expense can be deducted, and only the business portion And the way the business portion works is with the amount of mileage that you used for business versus the total mileage that you incurred in the year. You do that division and then multiply each expense that you incurred. Again, this adds up a lot. With the price of gas these days, you cannot overlook that. The amount of interest that you pay on a car loan or the leasing expenses. In addition to that, you can also claim depreciation on your car. Usually it's around 30% class 10. If you have a very high-end vehicle, it's class 10.1, and they've introduced new classes for EVs. So definitely something that you don't want to overlook. What people tend to overlook is the need for a log to log your expenses, and you should have one at all times in case of the CRA asks you to justify your car expenses. Number 3. Number 2, food and entertainment, and that lately has been in the news thanks to GC strategies, and the conservative MPs are asking, have you met so-and-so outside of the office and why, and what were the expenses? Now, the CRA may ask you the same questions. However, what people do need to know is that in the course of normal business, it's all right to take your clients for a dinner, especially clients that are very loyal to you. Pardon me, my voice is running out. And as long as it doesn't fall into the category of a bribe, it's a perfectly legitimate expense. I've seen food suppliers at restaurants give to the restaurants that purchase a lot of food from them tickets to a hockey game. Well, as long as the exchange is something fair and reasonable and it doesn't bode as a bribe, then you can certainly expense it, and it's usually expensed at 50%, because the CRA, what they consider is that one portion of that expense is actually for your benefit, and the other portion is for the benefit of your client. Perfectly understandable, perfectly reasonable, as long as it's not unreasonable and outrageous. It's a business tactic that has been used often enough, and it's within the realm of a proper tax deduction or a tax expense. Now, number 1, I bet you didn't know that, but the CRA, I'm talking about the CRA mainly as opposed to Revenue Quebec, because CRA actually does run the show, and Quebec harmonizes a lot with the federal government. There are a few items that are not harmonized, but relatively speaking, it's sauce for the goose, sauce for the gander. 9 times out of 10 or 8 times out of 10. So number 1, this is an important one. And I'm naming it under the tax category, class 14.1. Now remember at the start of the video, I mentioned that there are 2 types of expenses, write-offs if you may, capital and current expense. Capital being of lasting value, and current is something that its benefit does not last more than a year, and you need to incur it in order to keep your business going. Class 14.1 is a capital expenditure, and it relates to goodwill and intangible property. So, for example, in a farming business, it could be a quota of a certain product that you have. It could be a non-competition agreement. It could be a client list that you purchased from another business. It can also represent your reputation, your business reputation in the industry or the segment that you're in, that you're conducting your business in. Now, how do you establish that amount? Well, I have a brilliant idea. When you go to a CPA to establish your 5-year plan, and that's something people should really do and consider, at least incurring that expense, an expense to consult a CPA about your business, to do a business plan, and then ask him Um, what intangible um, amount should I be claiming under Class 14.1? In this particular case, I'm talking about property, intangible property acquired after January 1st, 2017. It's a 5% capital expenditure on a declining balance method. So ask your accountant. Your accountant might consult a business broker, a chartered business broker, to try and establish that amount on his behalf. Obviously, there's going to be charges for that. However, the reason why I am recommending a CPA or a chartered business broker is because these folks can evaluate that. Once they put their evaluation on paper, if the CRA decides to challenge that amount that you're claiming, they would have to employ another CPA or a chartered business broker in order to uh, challenge that amount. And usually, because of professional courtesy, if the first professional has done their work correctly, the other professional will not challenge the initial one that you employed. So what can that bring to you? Well, suppose um, your amount that the professional has determined was $70,000, right? And you're running a normal business. Let's say you have an online business that you're selling uh, almost like a non-retailer goods over the internet. You got 70,000 times 5%. It's $3,500 of a deduction off your income. And the following year, you'll take, it's on a declining balance method, so you take 70,000 minus the 3,500 you claimed this year. You're left with 66,500, and the asset, this class of assets can also increase over time if you get new intangibles or goodwill. So that is a good thing to know. Plus, the CRA expects you to have, every business to have, something to this effect on their income statement. So now you might ask yourself, hey, George, it's now April 26th. Why are you telling me this now? Why didn't you tell me earlier? Well, guess what? Although tax is due on April 30th, as a self-employed person, believe the tax filing deadline is June 15th. And if you've already filed your return, you can ask for an adjustment. But be cognizant that you might have to provide proof of these numbers. So keep your receipts, keep your appraisals, keep any documents that pertain to these expenses and deductions that you've claimed or are about to claim. And with that said, I've said all I could say. Thank you for liking and subscribing. Again, I am not monetized. I don't plan to be monetized, but your positive feedback will help me and encourage me to create more videos of this nature. And if you have any questions, feel free to comment below. Take care. Be well.